Hey guys, welcome back to another video. This is MAKIA FX. I'm going to be teaching you guys today how to use the Fibonacci to trade XAU USD. That's gold. First thing first, you can use this same strategy on any different currency pairs or even indices and the rest. But for this video, I'm going to be using this on gold. Step number one, make sure you use the 4-hour time frame. You can use a daily time frame, but for this particular video, my strategy, I use with the 4-hour time frame for the Fibonacci. The next thing I have to do is that I have to make sure that the market is a trending market. You can't use this strategy in a market that is not trending. If it's in a ranging market, you can't use the Fibonacci strategy. You have to use a different strategy. I got different strategies which I use in different markets, but for the Fibonacci strategy, it must be on an uptrend or it must be in a downtrend. The next thing you're gonna do is that you also have to watch out for the time frame. It means that I'll mostly do within a 1 month time frame, or let's say a 1.5 month time frame. I don't use nothing less than the 3 weeks time frame to use this strategy. I mean, this is week 1, this is week 2, this is week 3, and this is week 4, if you know what I'm saying. Now the next thing I will do is that we have to draw our support and resistance zones. These are very important psychological levels that are in the market, and we all have to know this particular level. So as you can clearly see, this is technically what I'll call, as you can clearly see, I've drawn my zones. This is the first zone. Actually, yeah, this is the first zone. The next zone will be this area. The next zone will be this area. Another zone will also be this area, and this also may be another zone. This will be another zone, and this will be another zone. So these are what I'll call the support and resistance zones which I've drawn. Now when I'm done with the support and resistance zone, the next thing I will draw is my trend line. As you can clearly see, let me just delete it and draw it all over again. So I'll draw my trend line from this point, and I'll go up to this point. So we have our trend line, we have our support and resistance zones, because these are important psychological levels in the market. The next thing we can do right now is that we can now put our Fibonacci. I'll click the Fibonacci tool, which is at this particular area. I'll click the tool. I'll come to the lowest time frame, the lowest point or the lower week of the current month, because this is actually a 4-week time period. This is week 1, week 2, week 3, week 4. Yeah, so I'll click it and put it at this area and draw it up to this area, to the highest point of the week or of the month. Sorry, the highest point of the month. I'll put the Fibonacci at that particular area. So that's it there. So we have the low of the current 4-week period, and we have the high of the current 4-week period. So this is the Fibonacci. Now when you see the Fibonacci, you have to also watch and see how it reacts towards the zone. We can clearly see that the Fibonacci reacted at this 6:1 level, and whenever the Fibonacci reacted at this golden ratio level, it shows us that the Fibonacci is actually strong, because when it bounces at this level, it will go back to it will retrace back to the upside. And that's what happened. It formed a high here, it fall down, then it reacted at this level. As we can see that there were candlesticks that were there. We had doji candles forming around this area, and we also had a consolidation around this area, and prices finally went back to the upside and formed a high at this area. So now, because we had this high here, if we're supposed to be trading, we're supposed to wait for price to come and hit this particular zone again, hoping that there's going to be a support around that area, pushing prices to the upside. And that's what happened. When prices came and hit this zone, what do we see? We saw that there was a support around this particular area, which I drew already. We had a support around this area, but also we also had this trend line that I drew from point A to point B, and this was also point C. So you can see how I've put the support, that's the resistance and support line. I put the trend line, and also we have the Fibonacci hitting at this level. So this is really a very strong area of confluence. Now because of what happened here, what do we see? We see that we had different candlesticks forming around this area. We had doji, we had in the industry candle, we had different candles forming here, but finally we had a breakout candle. This candle, this strong candle actually was able to go and break out these previous candles. And now what happened was that even though you can't really call this one a breakout candle, but this next candle was actually a breakout candle. So because now the price break out of this region, this area, we could enter buys around this particular area in the 4-hour time frame, or you can go to the 1-hour time frame. You could enter buys at this area. Also, don't forget that this 50 level was also, it formed a support around that area. So at this 50 level, we saw that there was a support to the upside, and price went to the upside. Because price was not able to break this 61.8 level, and prices went up and it broke this 50 level, it means that the trend is going back to the upside. So we could enter buys at this area. We close at this area. When it falls back down, this will be the second retest, and you can actually see what happened. This is the second retest. We saw a doji candle forming, and what happened? This next candle, the next to this candle was an initial candle. The next candle was actually a breakout candle to show us that this pair is moving back to the upside. So when price will go now to the upside, because of what happened at this area, we'll close our position around this particular area. So for those who are trading, you know how we do it in our group. If you're in our group, you know exactly how we do. We don't wait for price to actually come and hit the zone. We close it before the zone. So in our group, we break down these things. In our group, we break these things down for forex traders, for those who want to learn how to trade forex. We don't actually wait for price to come and hit this particular area. We will actually close it before it hits the area, because sometimes it may actually fall back down. So this is actually an area where, because of the previous reaction at this area, look at the strength of the candle. This is actually an area where, as we are closing our positions, we're entering sells, hoping that price will go to the downside. So this is how we use the Fibonacci with confluence. We had 3 confluence in this particular area. We had the trend line, that was the confluence. We had the support, that was the confluence, and we also had candlesticks forming. So we also saw the candlestick formation as a confluence to help us to have more faith to buy this pair, hoping that it will move to the upside. And that's what particularly happened. So this is how we trade the Fibonacci. We use the 4 hours and we use a particular pair, even though you can use different pairs to trade this Fibonacci. This is only for the uptrend. For the downtrend, I'll do another video on that as time goes on. So with that said, so what do we see right now? We saw that, okay, because price fell to the downside again, this particular trend line is also another strong trend line, and we saw how price reacted towards the trend line. So we know that in the future, price will also move back to the upside. So we're expecting price to move to the upside. You can actually see the wicks that are forming on the 4-hour time frame. The key time frame for trading is a 4-hour time frame. For those who are day traders, you know what I'm saying. So most of our analysis is done in the 4-hour time frame. Then we can go to the 1-hour time frame and dabble around there, because there's a lot of noise when you go to the smaller time frame. But in the higher time frames, there's clarity, mostly from the 4-hour time frame going to the daily and the weekly. So with that said, this is how we use the Fibonacci to trade forex. You must have the confluence, because if you don't have the confluence, you can't be sure of what you're doing. And also, if price was supposed to break this particular level, this 61.8, which is called the golden ratio, if price break this particular level, we will enter sells, knowing that price will likely fall to this point and the trend may become bearish. So that's how we use the Fibonacci to trade. If you like this video, hit the like button, subscribe, and leave your thoughts in the comment section. Bye.